Hello everybody, welcome back to another Lumley trading video. In this one we're going to be going through Microbot Medical, ticker MBOT, because it was requested. Now, to get straight into it, firstly, we want to point out, obviously, what happened on this big move here. Did it move out of nowhere, or was there some sort of a catalyst? Now, this did happen about a month ago now, but yes, this was off a catalyst, and definitely one that is kind of worth the move. So, they achieved 100% success rate for Liberty in excessive pre-trial animal studies. But anyway, no matter what, as soon as you see that, especially when you see 100% success rate, that is going to be justification for that sort of move. And that's why we're seeing it holding that move. I mean, obviously, we had the initial reaction. We sold into that. Investors were relatively happy with its current price. They thought it was getting discounted off the success of the news, and then it was brought back up. So we can see investors are valuing this company, and so now we are quite unlikely, I would say, to come and fill this gap and kind of come back down to these lows, unless maybe the overall market becomes very weak. So wanted to cover that first. Now, what are the key levels though from here? So right now you can see we're basically hovering within our first deviation range, and this is between $2.75 and $2.93. So basically we're just really right now debating whether we can hold or we're going to fail this level. So I wouldn't be trading right now. I would really be waiting for it to pick a direction, because if we crack to the downside, then really we are looking for a push to statistical mean, which is at around $1.80. So if we push to the downside, that's going to be most likely the area we're going to go to. And what I mean by break it as well, I don't mean we just kind of get these small wicks where we come down. I mean we actually break below it, we come back to test it as a resistance, and if it holds and we continue to sell off, then again 180 is going to be that key target. Now, on the other hand, if we can hold this area, and like I said, I'm not trading this range, so that's why we're waiting for a move either direction. But if we can get a move to the upside, then into 370 and 417, these are going to be key resistances. So if we were long biased, these are definitely good areas to be taken in profits. And again, these videos are from a trading perspective. If you're looking at the long term, you're looking at investing this video, then you may want to be holding for longer. But from a purely trading perspective, these are high levels where we're likely to start pulling back. So if we're long, we want to be selling most likely our position coming into these levels. And what it also means as well is if these are high probability areas where we start to pull back, it means we can also look at it short buys. We can look to start shorting the shares coming into this level, or actually sometimes this is hard to borrow. So if it's hard to borrow, we can look to play the options. That could be outright puts or vertical spreads, because again, they do provide options. So again, looking short buys on the 370, 417, but again, these can be used as targets as well. Now, where I would stop looking at so-called targets and really flip short buys would be coming into these final two levels. So 466 and 545. Now these are our third deviations between the 6-month and the 1-year chart, so really coming into these areas. On any stock we look at, we don't expect stocks to trade above their third deviation, and even if they do, it tends to be short-lived. And the reason for that is, again, if you understand standard deviations, you know that 99.7% of data should trade within those third deviations. So it really means if we start breaking this range, again, a pullback back below that is very likely. So that's where we look to short. And again, if we're long biased, that's why from how I trade, I will never hold a stock past this level, because the likelihood is it's a lot more likely to pull back than it is to continue the trend. Yes, occasionally you get that one stock which has super strong momentum and it will continue to go, but 9 times out of 10, they will pull back coming into these levels. So to me, I'm never going to hold a stock long through this level. So to me, MBOT becomes only a short buy stock once we come into this area. Again, this is from a trading perspective. If you're looking at the long term, you may not want to be selling out even at these extremely overbought areas. And if you want to sell out, wait for the pullback and buy back in into your long term. Again, that's all going to be down to you. But that is how I'm looking at MBOT. Those are going to be the key levels. So I hope you enjoyed the video. If you did, why not drop a like and subscribe and check out this video here.